Indeed, and in terms of values, I am aware that Tesla has a high estimate. Guests have told us they think it's only $25, which sounds incredibly cheap for a product bearing the Tesla name. Which stocks, domestically or internationally, do you believe have some upside potential in the car industry? There are, in my opinion, three to consider first. Let's face it, for starters, Tesla is the most profitable car company in the world, with annual growth of 40%. They are selling at a 7 or 8x multiple, and this year they will be valued at over $100 billion. That's not bad for a business whose financials resemble those of a tech company rather than an automaker. Recent news regarding Tesla has been abundant, ranging from the Model 3's update to the brand new Optimus, the robot from Tesla, and even Morgan Stanley's increase in its target price for the company. There's a lot of optimism in the air, which might be enough to raise Tesla's stock price to some pretty intriguing levels. Join us as we explore the most recent developments involving Tesla and the possible effects they may have on the company's stock price as of right now. Regarding Tesla, we have some really exciting news to share, and it is around the excitement around the leader in electric vehicles. We believe that Tesla's developments in battery technology, electric vehicles, and space exploration will benefit the company's shares, given the company has been making news in these areas. For example, Tesla recently revealed that it is developing an AI robot that will be capable of carrying out labor-intensive, hazardous, or monotonous activities for people. In addition to showcasing Tesla's superiority in robotics and AI, this project may lead to the company's entry into new markets and sources of income. This might be really significant for Tesla. Do you want to examine the automakers more closely? Given the UAW strike, American manufacturers are receiving a lot of attention. Tesla might be the one to benefit. Steve Wesley, the managing partner and founder of the Wesley Group, previously served on the Tesla board, so he has a clear understanding of the situation. The UAW strike is currently growing. There are currently 25,000 striking employees, and that number is rising. Your opinions on this particular section? At this moment, it's more about GM and less about Stellantis, but the strike will continue until a compromise is reached. When does it become a huge deal, and how big of a deal is it? C, I believe it's already quite significant. Although it comes at a difficult moment for Ford and GM, we all want to see increased salaries for American workers. This is the reason why. First, compared to Tesla's 2 million units sold in 2023, Ford and GM are each battling to sell just 100,000 units. They should be catching up, but their current rate is less than 5%. It stings if those numbers decline. Second, a worldwide pricing war is being sparked by Tesla. Just 1 year, Tesla has lowered costs by 6 times. Ford, Volkswagen, and General Motors are all attempting to stay competitive. But keep in mind the overall picture. Tesla's net margins are 12.9%, in addition to selling a lot more electric cars. In contrast, that is 2.4% at Ford, 6% at GM, and 4% at Volkswagen. It's not the right time to be increasing expenditures at such companies. For consumers, this is fantastic news. Tesla is taking advantage of a gap in the market. The Chinese are cutting expenses in the very same way that BYD is. Although EVs will be more affordable than ever, manufacturers with expensive cost structures will be under pressure. Ford and GM must exercise caution. It will be fascinating to watch this one. One of the most inventive and forward-thinking businesses in the world, Tesla continues to strive for perfection as evidenced by its latest improvements. Tesla appears to be receiving a cosmic high five from the universe, as indications from the market point to a prosperous and sunny 2024 for the company. Good vibrations everywhere. For the business and its investors, this might portend exciting things in the years to come. Welcome back to Tesla Tomorrow, everyone. Recent reports state that a major bank has maintained a long-term positive position on Tesla. According to a recent note from Deutsche Bank, there is a significant downside risk to the Wall Street consensus, given the likelihood of modest volume growth in the upcoming year. The bank reduced its price estimate for Tesla shares from $300 to $285, but it said that even while short-term fundamentals could be difficult, it still saw Tesla as the industry leader in electric vehicles. The bank also pointed out that businesses such as Ford and GM may face a significant labor cost disadvantage in the future. It thinks that this might provide Tesla an even greater cost advantage over the incumbents who are still in the early stages of their EV transition. One important driver of growth for Tesla stock, as noted by Deutsche Bank in its note, is the development of a next-generation platform for a more compact and reasonably priced model. We believe that not many people are aware of how significant this is. There is a lot to get enthused about with Tesla's recent stock market surges. Thus, it's an exciting ride for Tesla, whether you're an investor or just a follower of the automaker and its revolution. But before we continue, please click the like button, subscribe, and enable post alerts if you enjoy this kind of content so you can be informed about all things Tesla. Let's start by discussing the stock market. Recently, Tesla's stock has increased by more than 1%, which is a tad on the risky side. Although it might not seem like much, that has a major impact on the stock market. This is something that investors are closely monitoring, and it goes beyond the figures. The atmosphere is buzzing. There is a lot of activity in the trading market right now, and bullish options are lighting up. Investors and aficionados are feeling rather positive about it. For example, Tesla is aiming to improve its gigacasting process so that it can die-cast nearly every portion of a vehicle in a single piece. It's really crazy. With the use of this technology, Tesla's vehicles will be lighter, more affordable, and less complicated while maintaining the same level of performance and safety. Also, it will help Tesla satisfy the rising demand for its goods by enabling it to create more cars more quickly and effectively. Tesla has added longer range and a sleeker appearance to its best-selling Model 3. More than any other EV on the market, the Model 3 can currently travel 423 miles on a single charge. A redesigned front fascia, headlights, taillights, wheels, and interior design are all included on the Model 3, which is now Tesla's most accessible and well-liked vehicle. With all of these upgrades, it will become an even more alluring and competitive choice for clients. These are only a handful of the most recent developments from Tesla, demonstrating why it is among the most innovative and forward-thinking businesses globally. These could be the explanations for why the price of Tesla stock will probably keep rising and rewarding investors. But there's a delightful surprise, so hold on to your seats. It turns out that the most shorted stock on the market right now is Tesla, the business about which everyone seems to have an opinion. The value of short positions, which are essentially wagers that the stock price would decline, is currently a staggering $2.33 billion. Yes, everyone has a stake in it. It's like playing tug of war with the stock. Will Tesla continue to rise, or will the shorts prevail? We're about to find out, but for now, let's hear from the professionals. One of Tesla's greatest admirers, Piper Sandler, is becoming increasingly upbeat about the company. With an overweight rating and a cool $300 price target for Tesla, they aren't wavering. It is analogous to stating, "We believe Tesla is headed in the right direction." It is comforting to know that analysts have faith in Tesla's future, as they frequently sway market opinion. It's interesting to note that this is not the first time they had positive things to say about Tesla. According to a recent estimate from this company, Tesla might earn about $885 million from superchargers in 2019 and $10 billion a year over the course of 10 years. The future direction of Tesla's stock price will be determined by this rapid rise in the company's market capitalization and revenue. This year, investors have reacted favorably to Tesla's decision to open up its charging network to EVs built by other businesses, as well as to the company's strategy of lowering prices and sacrificing some profits in order to win greater market share. As a result, the company's stocks and shares,